Hi, I'm Mal from the Money Study, bringing you another episode in our Take 10 challenge, the number 9. And this one's all about reviewing your savings account, having a look what you've got, where it is, what it's earning, and doing a bit of comparison to what other things may be out there. Before we kick it off, there's the disclaimer: facts and figures, it's information only, it is not advice. Of course, most of us understand what a savings account's all about in a bank. It's probably one of the most simplest investments out there. But I think we need to start off with understanding the easy ones before we get onto the more complicated situations. Where do you put your money? But just because it may be simple doesn't mean it's something that you should try and avoid. Sometimes we need it somewhere for our employer to put in our wages, and with something there to pay our bills with and so forth. But other times it can indeed be a very useful place to put our money while we're looking for alternatives perhaps, or just if things are not going too well in the markets, a nice, safe, reliable place to have our money. Now, most of the interest rates in savings are driven by the Reserve Bank of Australia's cash rate. So when they talk about here on that the Reserve Bank has put up interest rates, most people focus on their mortgage rates. So, oh my gosh, they've put up interest rates. Ouch, my mortgage has just gone from 5.5% to 6%. But of course, as someone saving, we should hope that the interest rate goes a little bit higher to get a better rate from the bank. Banks are very, very quick to pass on the increases to a mortgage. They tend to be a lot slower in giving us the increase on our savings, which is a little bit sad, but that's just the way the corporate world tends to work at times. And of course, the mortgage rate is always a lot higher than the savings rate, because that's how the banks make their money. Effectively, they lend money, they get your money, they give you some encouragement by giving you some interest to put the money into the bank, and then in theory, take that money, lend it to somebody else at a higher rate, and they make a profit. That's in theory. There's a lot more to it than that, but that'll do for the time being there. So, but yeah, it's just a nice, simple, low-risk way to save and earn some interest. And so it is a case, therefore, of choosing the right one, because it's not just everybody has a one type of savings account. Each bank offers you a range of different accounts, and when of course you're comparing one bank to another, we get awfully confused as to what we really should be looking for. Do we actually need to have more than one account? A lot of people are quite happy just to have one account. All the money goes into it, bills come out of it, they save inside that account for their holidays, they do everything out of the one account. And there's no reason that can't be done. It's just some people like to be able to see it easier as to how we're going, in which case they might have a savings account for a holiday, they might have a savings account for a child's wedding. It may be a case that they've got one just for paying the bills and other accounts. So some people might have 6 or 7 different accounts, and whatever works for you. I do like having a few. Basically keep the money aside for bills. I think is an excellent idea, that if you know what your bills are going to be, knowing full well there's enough money in that account with a bit of a buffer to, when a bill comes in, you think, okay, I'll just pull it out of my bill paying account. No stress, lovely, the money's there, done and dusted, okay? And so having a bill paying account is quite handy. Having one for savings is also, for a special event, not a bad idea to make sure you're putting enough aside to make sure it's growing as quickly as you would like to get to your goal by your predetermined number there. Do you need the facility to be able to actually walk into a branch? When you're choosing, some of these banks that are offering good rates don't actually have a branch for you to walk into, and that's why some of their interest rates are better, because they don't have this much costs to run branches. Now, if you're happy to do everything online, these days walking into a branch is a pretty dismal effect anyway. You walk in there and you might find one teller sitting behind the counter, and you'll find a couple of other people sitting behind their computers who don't want to engage eyes with you. Walking into a bank branch is certainly not inspiring. Anyway, but some people like it to be able to talk to somebody. Certainly may get a faster action than sometimes ringing them up and sitting on the phone for an extended period of time. So if we are comparing or looking at savings accounts, some of the things we need to take into account are these. I mean, obviously the interest rate is certainly something that you really need to consider. Is this thing going to pay me 1% on my money, or is it going to pay me 4% on my money? And obviously the more money you've got, the more impact that interest rate increase would have, as we've been looking at in previous sessions here. So the interest rate, but sometimes they talk about different interest rates, like there might be a base rate, but then you get a bonus rate for leaving the money in there for a certain amount of time, or adding money, or something like that. Maybe some other condition. You might have to have a minimum balance amount, that if you get above a certain amount, then you get a rate. If not, you don't, and so it goes on. So don't just check the rate, make sure what conditions, terms and conditions apply to you to actually get that rate. And of course, fees, some accounts are more expensive to run than others, literally because they are got more facilities and things more involved in those accounts. And so just check the fees, and not only just the fee to run the account, but there may be these other fees that for every time you do a transaction relating to, say, using an ATM or an EFTPOS, after a certain number of transactions, you get hit with this extra fee. And if you're doing if you've got an online account, but you're doing a hell of a lot of online transactions, these fees can indeed add up. So check the fees on all the transactions, the admin fees and so forth, because not much point in getting an extra 0.5% or so on our interest rate if we're losing that in fees over time there. Lots of different types, as we've already sort of pointed out, but yes, these online accounts generally, you'll see there in the next line, it may need to be linked. Generally, if it's just an online account, it would need to be linked to some sort of a savings account, perhaps. It just comes down to which bank you've got and who they are. As far as, we need to make sure that with these online accounts, we've got plenty of ability and easy to transact online, if that's all we can do. Introductory offers, where basically they may say to encourage you to come to their bank. They'll give you an extra 0.4% or whatever it may be while you're in a certain period, might be 6 months, 12 months, you get that higher rate. Perhaps when the introductory offer runs out, go looking for another bank if you want to pick up another introductory offer. Children's accounts are interesting in the regard that obviously a minor can't have, in theory, a bank under their own name as such. Generally speaking, there's a parent who's overseeing it as a trustee, but there certainly are children's accounts where, because of the taxation, the different reporting, and there's a lot to do with children's accounts, and I will be doing a session later on in saving in children's names and saving for children later on. It also comes down to, is this an individual account or a joint account? If you've got a partner, is this account just in your name? Ideally, look, if you are a couple that do share your finances, everything sort of works together. Ideally, having a joint account is far more flexible in the regard that either can operate it, or you can be a situation where both have to sign to do it. Generally speaking, either is far more flexible, as long as you trust your partner there. And if you don't trust your partner, perhaps get a new partner. But there are can be tax advantages if one partner has got big income, another partner's got a lower income, having accounts in different names, so that if there's a lot of tax to be paid on earnings, it's basically in the name of the partner who's on a lower taxable income. So it could be a case of organising these accounts depending on who's earning what and when. And it's always a case, if you've got a partner, consider, is there a benefit I shouldn't say a benefit having a partner, it's just a benefit in finances of having that partner. Retirement accounts, if you're over, some banks it's over 60, over 65 and so forth, where it's in a retirement account, they can give you different rates on retirement accounts. Usually there's limited number of transactions and so forth. So with all these things, just check the fine print, check the terms and conditions as to what these things really mean. As I said before, a linked account, it may be a case that it's just it has to go to a regular bank account. So you might have an online account which you can't actually put money into it directly. You've got to put it into your everyday account and then do a transfer from that everyday account into the online account, and so it goes on. You might go to a new bank and say, "You beauty, I can get onto this online account here and get this rate," but they say, "Look, no, but you've also got to have this, everyday account as well." So BTSA again, just understand what you've got to do to be able to get these accounts. Most of the banks have what's called like a progressive saver type account, which will give you a higher interest rate, providing you make regular payments into it. Might only be $10 a month that's got to go into there, but if you make a regular payment and you don't withdraw, then you get a higher rate. If you do withdraw, you don't get the higher rate, you just get the normal base rate. So the progressive savers are really good if you've got a goal, so that you're targeting, to a holiday in 3 years' time or 3 months' time even. But you've got a goal that you're trying to save for something, then a progressive saver or progressive account can certainly be a good idea in those circumstances. You still get an interest rate if you do withdraw. And with my bank, it actually warns me if I'm actually pulling money out of the wrong account. And if I accidentally try to pull money from my progressive account, it'll say, "Whoops, do you understand this is your progressive account? You will lose the higher interest rate," which I think is a good thing just in case you are pulling money from the wrong account. So, what interest rate are you currently getting? It's amazing. I get my clients coming in and, they've got these 3 or 4 accounts or whatever. And I say, "What interest rate are you getting?" And I reckon less than 2% of my clients would know what interest rate they're getting on their savings. And some of these people have got 200,000, or more sitting in a savings account, and they don't even know whether it's a good savings account or not. They haven't bothered moving from their lower interest rate everyday account. They have, $80,000 sitting in an everyday account, earning very little in comparison, when they really only need, 10 grand a month or whatever to do their transactions. So yeah, why aren't they moving it into a progressive saver and so forth? So go off and check. This is your homework. Go off and check, find out what your interest rates are. Find out, is your money sitting in the right accounts for interest rates for when you need the money and withdrawal purposes and so forth. But then compare. Because savings accounts are not like changing your credit card where you've got to have all these direct things. You could have one account for all your money to go into and out of your everyday account. But then I say you could have other accounts elsewhere without causing you too much of a headache to set it up. So if your bank, you're happy with its everyday account, it's pretty okay. But you look at these things like progressive savers and other accounts, online savers accounts and so forth, and you can get a better rate somewhere else, well, why not? There's a lot of numerous websites out there that'll help you to find interest rates. A couple of the big ones there, CanStar, Rate City, Mozo. There's a lot more than that, but generally speaking, if you just Googled interest rates Australia, you'll get inundated. These ones tend to come up pretty quickly on the first few pages or so. Especially CanStar is very well known for all sorts of comparing between super funds and insurances and so forth. So good comparison website. So yeah, do a comparison, do your numbers, and if it makes sense and it's not too much of a problem for you. See, any time we can just make a bit of dollars by by moving. Why aren't we? Why? There's no loyalty in banks. That's gone. That is gone. It's sort of like you go and talk to your friendly bank manager you've known for 20 years and he says, "Oh, Mal, thanks for coming in. Lovely to see you again." They would have a clue who I am. And even if you do go in and you make things it doesn't matter if you've been banking with them for 20 years, which I think is appalling. Every other business tries to establish relationships. I actually worked for a bank for a year, and that was about 11 months, 3 weeks too long. And I remember at one of these, learning sessions where we're teaching me what to do, they were quite adamant that they make more money out of a new client by bringing them across to various things and getting them established than they can, quite frankly, out of someone they've had for a long time. And which is, and I'm thinking, but surely any business says, isn't it better to look after the people we've already got? And they really couldn't care. So long as the money kept coming in, they just didn't care. Which the Banking Royal Commission didn't really do a lot as far as I'm concerned. Anyway, getting off the point, check your accounts, see what they're making, do some comparisons, work out. Now, if you need any more help to understand some of the terminology and jargon, and you've got some accounts you just want to go through and have a look, we're here to assist you in any way. Book an appointment via our website. Talk again on a future session.